Okay, Disney is a total dumpster fire. I got it up here, and from its all-time high, it is down 60%, 59%. I don't know if it's political or whatever. I think it's because the movies suck. I mean, they've been just absolutely terrible recently. Marvel, Star Wars. It's just my opinion. If you love them, I don't know. Something's wrong. Something's clearly wrong. So I don't know how to make a lot of money in the stock market, but I do know how to stay away from terrible, garbage, dumpster fire companies. At the moment, Disney, I think, will come back at some point, right? Disney's not going away. But I've got this overlay here. This is the Jason and Michael Pizzino Gann swing indicator. It's called the TIA Gann swing indicator. It's a paid indicator. I'll put a link in the description. Not financial advice. I just like the indicator. So if you want to use it up to you. And then I use the 50% tool, the Fibonacci's that you've seen me post a lot here, that I learned from Jason and Michael Pizzino, and I go by each swing. So this is a down move. It starts to show signs of life, move back up. You check the 50% and say, okay, it's got to get back above 184. Peaks above it, but gets rejected there. Okay, stay away. Let's move down to the next swing. So it swings lower. You go from the top, where it peaked out, down to the bottom, starts to bounce, doesn't even make it to the 50%. We were waiting for 164, didn't even make it there, rejected. We go lower, it just gets absolutely destroyed. It goes from 162 down to $89. Where does it get rejected? It starts to bounce. Now look, in here, I mean, this in itself is a 40% move. So if you can call that bottom and you can trade that and you can make money, great. I can't do that. Not yet. I don't know. I doubt I'll ever be able to do that, but I can't do it right now. That's for sure. But you get tempted to get in here, and it's getting rejected exactly at this 50%. So maybe when you see it move up a little bit, maybe you see move up 10%, and you think, oh, okay, it can make it to 126. That's a viable option. I can't do that. But stay away. Then we move to the next leg down, right at the 50%. Tops out. Exactly there. Next leg down. This is where it gets a little choppy and it gets a little tricky. So now we bust back above it. You might be tempted to jump in here. I feel like after this many months down, you got to give it some time, but it certainly could get a little bit confusing here. Blast back up, even blast above that high. So go back to the next swing. We're also above that 50%. Closed above it. Might want to take a chance here. Definitely set your stop loss at this 50%, because if it breaks down, it's going lower. So that would be if you went in at the close of that month, it would be a 3.5% loss. So that's not bad. You limit your losses. I would have no idea where to place the top target, and obviously it doesn't work out great. So we're looking at the next swing down. Again, I mean, this is exactly where it tops out, exactly at the 50%. Look down at the next low. It's pretty damn close. It doesn't even quite make it there. But, you know, if you're saying I'm not buying until it's over $94, $95, it doesn't make it there. It gets rejected. So now you can't even see it. But this would be the next swing down that we're like currently in the middle of. Like we're living in this right now. I would say don't touch it. Don't touch Disney until it's over, closed, and holds $88 as support, which does not seem like it's going to happen anytime soon. We're almost at the COVID lows. That's where it crashed to during Black Swan event. And after that, I mean, just lower and lower and lower. Talking about iconic Disney topping out at $202. We're now at $82 and looking to go lower. But that's the method. I'll put the links to the indicator in the description.